Hi there, welcome to Kneppy Invest and welcome to the 24th of June 2025. Time is currently 3:39 p.m. So just on 30 minutes left of trading today on a pretty good day on the ASX. No surprises there because of ceasefire rumors, talks in or between Iran and Israel. If you follow Trump on his Truth Social, pretty set in stone. However, I do like to see confirmation, or would like to see confirmation from Israel and Iran. We have seen a bit of chatter from Iran that they have acknowledged there is a ceasefire, but they also sent some more missiles towards Israel. And it could be the last set of missiles, sort of like the firing shot. But it was also a fairly weak volley of missiles, sort of like that weak volley of missiles they sent towards the US base in Qatar. So I think their response is running out of puff. It makes sense they're seeking out a ceasefire with Israel because they weren't winning this, and probably what they could have expected if they kept going down this path would be utter and complete destruction, although I'm being a little bit hyperbolic saying that, but they weren't going to win this. So it makes sense that Iran would seek out a ceasefire. I'd just like a bit of confirmation, but I do think things are moving in the right direction and tensions in that part of the world are definitely easing, which is why our market has rallied today and why also oil has dropped like a rock. So unless you're heavily invested in oil, you've had a pretty good day today. Okay, the agenda of today's video. We'll go through the ASX today, look at the best and worst performing sectors, indices, and also companies. Then I'll turn my attention to the top 5 stocks of the day, interesting group of companies. And then also chart of the day. Forgot about this yesterday. And chart of the day, or the company featured in the chart of the day, was mentioned twice yesterday from James Nicolo and Ben Hutchison, Worker. WRK. James Nicolo said, no mention of Worker, must be trying to buy them. Yes, I don't mention another 2,000 companies in my videos. That does not mean I'm trying to buy those companies as well. Worker did not release an announcement yesterday, yet the share price rose 20%. I won't talk about that company because they didn't release anything, as Ben Hutchinson did mention. But the chart does look interesting. I'll give you that. The chart does look interesting. Well, it did look interesting. Share price down today. Okay, on to the ASX today. So a pretty good day in the market. The other thing I noticed, just going through what's happened today, not a lot of volatility. So we opened up high and we've gone sideways ever since. I think the highest we did see at one point was maybe 1.1 to 1.2. The XTX, the All Tech, has been slowly dropping down, but nothing to be concerned right there. Now, as we turn attention to the best and worst performing sectors, there shouldn't be any surprises here. Materials financials up 1.8%, maybe a touch surprise there. Now, in saying that, because if you go to the resources indices, only up 0.62%. So what's going on there? Resources up 0.62%, materials up 1.81%. The whole reason is because oil is in energy, and energy is down 4.09%. So that's why materials sectors had a good day, but the resources indice has not, because where oil is. I would assume iron ores had a pretty good day. I'm not sure what's happening with the banks. In fact, the ASX 200 banks up, this is 2.08%. That's a little bit surprising, but you know my opinion on the banks, particularly CBA. There was also a really good article in Market Index, technical analysis article, talking about the fund managers saying CBA is well overvalued, it's a sell, but the chart for CBA looks really good. CBA chart looks really good. So if I was trading CBA, there's no way I'd be out of this just yet, because even though the share price is going higher and higher on the back of no financial improvement from the company, or very little financial improvement, this momentum can keep on going and push the share price and valuation of CBA well beyond where it is right now. So just use the momentum and the trend, as that article said, trend is your friend, or something like that. Anyway, so I'll see if I can find this article, just going through the best performing sectors and indices. Anyway, a pretty bad day for utilities and energy, as to be expected, and ASX 20 up 1.14%. And gold up slightly. I wasn't sure if gold was going to be up or down today, so maybe that is a bit of a surprise. I Probably would have assumed down a little bit, but gold sector or indice up 0.13%. ASX 20 up 1.14%. Now, based off what I'm looking at, the sectors, I'm assuming Woodside's down a fair bit. I'm also going to assume that the big banks are up a fair bit today. Maybe one of the big banks is up over 3%. I'm also assuming iron ore companies are up big, so Fortescue, Rio Tinto, and BHP. And what else? Probably WiseTech's up. A few other tech companies are up. I'm going to say 16 companies up, 4 down. Which companies will be down? Woodside, Transurban, a little bit more defensive there. Oh, what else? That's 2. Let's have a look at the ASX 20, see how right I am. 16 up, 4 down. Yep, oh, bullseye. But which 4 companies are down? I think I've got 2 of them. But what are the other 2 companies down? Okay, so Woodside down 6.63%. No surprise there. Some might say, wow, it's a natural gas company, not an oil company, but, doesn't matter. Transurban down 1.1%, 1.01%. No surprise there. QBE, Telstra. You should have thought of Telstra. Yeah, Telstra is really defensive, although chart looks pretty good. So no surprise, Telstra is down. QBA, not sure about that one. And the best performing companies, iron ore, Fortescue, Rio Tinto up a fair bit. And then we have Westpac, almost up 3%, up 2.71%. And there's WiseTech, up 2.53%. In fact, all the big banks are up by more than 1%. ANZ is a bit of a lagger there, only up 1.12%. Okay, and there it is. Big fund managers hate CBA because it's overvalued, but the trend is your friend. And that's absolutely right. This is a beautiful trend. This is like a chart this is a chart to study. It's a beautiful trend. But again, another reason you might study this chart in the future is when eventually the tide does turn negative, just what you should look out for to see when the trend and sentiment shifts. So keep your eye on CBA because eventually it will shift. I'd say it's almost 100% likely it is going to shift, but it's not shifting yet. Okay, on to the top gainers. Top gainers to do. Okay, GBM Resources, fairly small company, share price up 117%. I did miss this one. GBM, I would assume, by the way, there's Worker. I would assume that this is based off drilling results. And yeah, a lot of times I just go straight past drilling results because the share price could go either way. Okay, so let's have a look at the announcement. I'm pretty sure this company did release something today. Oh no, okay, there you go. So completely different than what I would be thinking. And I can definitely say why I completely ignored this one. $13 million placement, repayment of debt and board restructure. So the market likes that sort of news, repayment of debt, board restructure. I wonder who is new on the board, if that is what they've done. Ian Middlemass to become chairman of GBM and a new major shareholder subscribing for $1.2 million under the placement. Robert B. Hetz and Peter Fox also to be appointed as non-executive directors of GBM. Don't know any of those names, but the market likes it. The market really, really likes it. I would not be enticed or seduced by this type of announcement. What was the ticker again? GBZ. Sorry, got the wrong letter there. And let's have a look at the chart for GBM. And this chart, does nothing for me. By the way, the share price was below 1 cent, so even before today. So the chart does not look good. So even though share price has risen today, who knows what's going to happen over the next few days. So that's GBM Resources. Greatland Resources, GGP, says it's an ETF. I'm wondering if that's if that's IPO. Greatland Resources, that's a wrong. GGP, Greatland Resources, we can see if it's an IPO. Yep, there it is. It's a listing, which means we've had 2 companies list on the ASX today. And I'll talk about one of those companies in the top 5 stocks. Okay, so we can move on. What else? Resolution Minerals in focus. I'm going to see if Resolution Minerals has released anything of note because share price up a fair bit. Pretty big. Nothing much. Nothing much for RML. Pretty sure this chart looks pretty good, but not the sort of chart that would, again, seduce me. Yeah, it did look good. Beautiful turnaround. The great turnaround. Yeah, and not much of a dip. That's the other thing, not much of a dip. So, yeah. That's all I'm going to say about that one. It's not the worst chart. Not the worst chart. Anything else here? Collins Food chart, not the chart, stock of the day. Results. Think the market got it wrong. Pentanet. Go Pentanet. There was a mention of Pentanet in my comment section as well. Fishball. So maybe I'll talk about Pentanet tomorrow. And actually, let's have a look at the chart now. This is a weird one because the last two Appendix 4Cs were really good. And for some reason, the share price was down at long-term lows, if not all-time lows. So even though company relates really to Appendix 4Cs, you can see the share price going on runs. There was just enough negative sentiment in the company that even though the company released some really good financial results, those people, ex-shareholders, don't care about that sort of thing. All they care about is the share price had dropped from when they bought. It's a dog stock and they have to sell. And the selling has continued to send the share price down to new all-time lows. Have we seen a little bit of buying coming in today? A little bit of buying coming today. Really big increase in volume, comparatively speaking, over the last month or so. So interesting Pentanet. And if they release another really good Appendix 4C, honestly, can the selling continue after that? I don't know. So interesting. I do own some shares, by the way, just because of their results. Really good results. Cash flow positive. That's all I want. Cash flow positive. And 2 quarters of cash flow positive. Okay. So go Pentanet. That's what I'm going to say. But it's low volume. And Close the Loop, has the low come in for Close the Loop. Top gainers by market cap. GQG. I think this company might be possibly cheap. Virgin Australia, the IPO, has opened higher from the IPO price. I'm staying well away from that one for various reasons, which I'll touch upon in a second. Webjet's had a good day, which is good. Appen Findy did release something. Share price up 13%, but really not on the back of anything of substance, in my opinion. They just told us who's going to be their lead managers for the Indian IPO. Yeah, who cares? But the market likes it for some reason. Also, the chart for Findy does look, I wouldn't say interesting, but the share price looks like it might have bounced off a nice little support level at about $3 and, well, really, $3.50, that support level is. So it's really bounced off it. Cogstate, also in my top 5 stocks. I'll talk about that company. And that's about it. Now on to the top losers. And I can't remember any company releasing anything really bad today. Okay, so Bezra Gold, Buru Energy down, but could be on noise. Highcom, share price of that company had gone on a run. Not surprised there. I tend to stay out of these sort of setups. You can see Highcom share price going on a massive run. Share price has pulled back today. That's what can happen. So you can see the massive increase in volume. And we have seen a little bit of buying coming in today. Share price was the lowest, 23 cents. But why? Why would you? Yeah, look at that. It looked like the selling happened in about a 30-minute period at about 1:30, and that was the low also, and then share prices bounced. I don't like these sort of setups where the share price just accelerates up, sort of like exponentially rises, because eventually the share price will pull back significantly, and we've seen that with Highcom. Okay, and top losers, otherwise, there's nothing here. I just can't remember any really bad announcements today. Top losers by market cap. Energy, St. Barbara. Energy, AIC Mines, I'm pretty sure they did release or have a capital raising. And there's Worker. Talk about Worker in a second. Oil Index, or ETF, not Index, ETF down, which is understandable. And yeah, that's about it. And Kroon, which I am trading, down 7.9%. Was down 10%, so it has rallied a little bit. Okay, now onto the top 5 stocks of the day. Starting off, actually, before we do that, I've mentioned Bowen Coking Coal a few times in the last week, and I think I mentioned there is no way I would even think about buying shares in this company. Share price dropped 49 and 47% in consecutive days on the back of some negative news. So share price dropped from 35 cents to 9.6 cents. And there's no way, even though it's significantly oversold, no way I would even think about buying shares in this one. So the company has gone into trading halt today, and I don't like the sound of this trading halt. So this is what it says for Bowen Coking Coal. Now this could be good, but I'm just not liking the sound. And I think the market, with indicator price down a little bit, is probably thinking this is not going to be good news either. So trading halt is requested pending an announcement by the company concerning the status of its efforts to seek funding to support the current scale of operations in the prevailing depressed coal price environment exacerbated by state royalty pressures. Anyway, so I think there is a chance that Bowen Coking Coal will no longer be with us in like a year's time if coal prices remain suppressed. Okay, now on to the top 5 stocks of the day, starting off with an IPO. Virgin Australia. Who's going to buy shares in this one? Not me. I am definitely not going to buy shares in this one. No way, Jose. 2 reasons. It's an airline. Don't like airlines. I will trade airlines, but there is no way I would ever own an airline for the long term. They are not high quality. There is no way you could actually call an airline company high quality. Capital expenditure is way too high. And there's other things going against these sort of companies. Like if oil prices rise, these companies do falter. The other reason I would never buy Virgin Australia is because it's spun out of private equity. That's a big no-go for me. Absolutely a no-go for me. I will never, ever buy something that has been spun out of private equity. I've just seen too many disaster stories. It's typically not a good thing because they will pimp up the company to make it seem like it's much better, it's doing much better than it actually is. And a lot of times they will, what company was it? It was Dick Smith, if I remember correctly, Dick Smith Electronics. What they did is they did something with the inventory to make it seem like it was doing much better, and it wasn't. So I stay away from companies that are being listed from private equity. And the third reason is I typically don't buy IPOs unless they release a profit upgrade or until they release some financial statements. So if Virgin Australia does not release a profit upgrade within the next, before they release their next results, there's zero chance I'll buy any shares, even trade Virgin Australia. So that is the first time I'm able to trade this company, when they release results or if they release a profit upgrade. Anyway, so who's buying any shares in Virgin Australia? Not me at all. But, whatever floats your boat. So at least we have a new company on the ASX. That's all I can say. So the amount of companies that have been dropping off the ASX has been alarming over the last few years, and very little IPOs. So at least we have another company on the ASX. That's all I can say. Anyway, company coming in at number 4, we have a very small company, Veris Limited. Oh, share price only up 4%. I expected much better. And the share price was up at one point today, almost 20% at the high, went from 5 cents to 5.9 cents. I actually don't know how big this company, I'm assuming it's like $20 to $30 million. 27.13 million. Oh man, I should be doing this for as a profession. Just guessing market cap and guessing how many companies in the ASX 20 go up or down. Anyway, so Veris, I'm pretty sure this is, I don't want to say mining services company, but definitely services, maybe mining, engineering, something like that. Let's have a look. Provider of spatial data services, got the data services right, to private and public sector clients across the infrastructure, property, resources, utilities. So on the right track. Spatial data services. So Stockland, Mirvac, Lendlease are some of their clients. BHP, Rio Tinto as well. So they have some nice clients, but it's just, I've looked at this company maybe once or twice and nothing has attracted me towards Veris. However, in saying that, maybe today is different. Maybe today is the first time I've really taken notice of this company because they did release a trading update and return to profitability. Oh, how exciting. Return to profitability. So I suppose that's always a good thing, but just because they become profitable again doesn't mean they can remain profitable. So an audited net profit before tax, not after tax, before tax, expected to be between 1.8 and 2 million, represents a significant turnaround from 4.4 million loss last year. Revenue between 95 and 97 million. Okay, so some numbers there, and they also have a positive outlook section as well. Strong forward workload exceeding 62 million, weighted pipeline of over 195 million. Doesn't sound that big. What I'm going to do now, which I didn't do when I first saw this announcement, they're doing a buyback as well, is I'm going to have a look at their most recent results, half-year results, and I'm going to go to August last year. I just want to know if that loss was because of a one-off. So they could have had a one-off, which sent them from having a profit to a loss. And this could be just manipulation for the company to seem like they're doing better than they actually are. So let's go have a look at their results. Where are we? Director's report. Director's report. Here we go. Okay, so last year they did indeed have a loss of 4.7 million. The previous year, 2023, they did have a profit. So why did they have a loss? It seems like this was a true loss because revenue was 93 million, expenses 96.5 million, and they had a loss of 3.9 million just from operations. So yeah, this is a true loss. There's no one-offs there. Also finance costs, so they must have a little bit of debt. Yes, they have a little bit of debt, not a massive amount of debt. Equity of only 23 million, down from 28.8 million. That's concerning. And cash flow, they were operating cash flow positive, 7.7 million, 8.0 million in 2023, and free cash flow positive by almost 5 million. There you go. But repayment of lease liabilities was 5.8 million. So if you take that into account, they were not generating any cash. Anyway, so just based off these results, nothing to write home about. So at least they are moving in the right direction. Oh, I should have looked at revenue. 95 to 97 million. I completely forgot about that. How much revenue do they have? I was so happy that that did not go back. That went back really quickly. Where is it? Director report. I hate how director report are a start. I think the financial statements should be at the start. It's just my feelings. Revenue of 92.6 million. There you go. So revenue has increased slightly. Okay, so let's have a look at the chart for Veris. I don't have strong vibes about this one, feelings. I think I will be staying away. The only way I could be seduced would be a chart. And saying that, the chart was in a downtrend for a while. Share price looked like it was been going sideways. And if the share price went above 6 cents today, that would have been a really bullish move. But we have seen a bit of selling coming in, and the share price is back down to where it was, almost where it was. So potentially this was looking good if it got above 6 cents just as a trade. But I don't think this is a high quality company at all. In fact, if you go back through time, this is the actual chart of a low quality company. Share price up and down, and you just trade this company. That's all you do with Veris, is you just trade it. You would never own this company for the long term. Okay, on to company coming in at number 3, Archtis. So there was a comment left in one of my videos last week. How you don't know anything about Archtis. How you suck. You don't know anything about Archtis. Share price of this company is going to the moon. That sort of thing. I just had to delete it because of the going to the moon. I just don't like when people say that sort of thing. You just don't know. Anyway, Archtis last week released 2 announcements that I thought were price sensitive, but they were not marked price sensitive. So Archtis achieved sale of NC Protect to US Department of Defense. Just because it's US Department of Defense, I thought, wow, that's price sensitive. And also Archtis enters UK market with Defense Industry Award. I thought, why were these not marked price sensitive. And then, oh yeah, by the way, they couldn't spell suspicion. And then, if you look at the trade history, share price went up 35, 60, and 63%. So obviously the market thought these were price sensitive announcements. And then because the share price rallied like that, the ASX went, oh, what's happening here? Why is the share price rallying? Well, duh. Well, duh. And the company had to answer the price query. And I love their answer. They sort of took a bit of a dig towards the ASX in their answer, a very subtle dig. Anyway, so they gave a really detailed response. This is exactly what a company should do when they receive a price query, even if they should answer no to the first question. So they actually did answer no. So initially they said no. The company's not aware of any information. However, they then said, they mentioned those two announcements, and they also said, following consideration of ASX Guidance Note 8, the company made the determination that those announcements were not price sensitive on the basis of the relatively small contract value of those contracts. In particular, given ASX published concerns around companies using small value contracts to ramp their share price. I know exactly what they're talking about here. A company got in trouble quite a few years ago because the ASX thought this company was ramping up their share price by releasing announcements of small value contracts. So in my opinion, Archtis is just having a bit of a dig towards the ASX. Anyway, so Archtis did not consider these announcements to be price sensitive. Now, the ASX can change determination. They can change it. In fact, the final determination is for or from the ASX. But I don't think they would do that all that often. And they also mention it is not unreasonable for the company to deduce that investors have recognized the significance of these opportunities and the capacity for broader near-term expansion in these high-value markets. Not only are these the largest defense and security markets in the Western world, these contracts validate demand for the company's unique product offering and prove the company's ability to penetrate and service such markets, despite rigorous compliance, etc., etc. And they keep on going on. So a lot of information here, superb information from the management of Archtis. So this is one of my favorite replies to an ASX price query. It is sometimes you just see no, not applicable, no. Or sometimes you only see like 4 words in response. They also don't have to answer question 2 because they sort of answer question no, even though their answer to question 1 is like 2 pages long. They still answered no, but they use a bit of creativity. And in question 3, they also gave a nice little answer as well, long answer, which is exactly what you want to see. So yeah, very, very extremely, I shouldn't use very all that often, a really extremely good response from Archtis. Very impressed. Now, saying all that, not surprised the share price is down. By the way, we're in closing auction. Not surprised the share price is down because the share price has rallied so much. And I thought maybe with the shares in this company being suspended for a little bit of time, that sort of excitement will drift away, will slowly drift, or maybe not slowly, but I thought the share price might drop even more than this. So there could be a bit of strength with what we're seeing with Archtis. These announcements could be a little bit stronger than even the company is sort of thinking. So let's have a look at the chart for Archtis. And you can see the share price has just gone bananas. Now, the share price has gone bananas. In this sort of situation, yeah, I would be personally staying well clear because I think you will see a fair bit of volatility. By the way, share price got as low as 16 cents today. So we have already seen a lot of volatility just today. And I think that volatility will continue for the foreseeable future. So unless you think this company is going to the moon, unless you think the share price is going to go up 10 million fold, just a little bit wary about the volatility. So that's Archtis. Coming in number 3, very interesting. Coming in number 2, we have Cogstate. Share price up 10%. For full disclosure purposes, on the back of this announcement, I took a trading position. It could have been a little bit premature, this trading position. I'll talk about that when we look at the chart. But this is a sort of announcement I am looking for. And even though chart is not exactly what I'm looking for, it's just close enough. Anyway, financial year 25 guidance upgraded. That's all I need to know. Financial year 25 guidance upgraded. They didn't really mention what was upgraded from. They just mentioned the numbers they're expecting now, and the numbers are significant improvement of last year. So where is it? There's a nice little summary here. So they're expecting for financial year 25, 52 to 54 million in revenue and profit before tax of 12 to 14 million. And last year, or compared to last year, that's significantly higher, particularly profit. Now, yeah, they didn't mention anything about, notice it's only very short, by the way, very short. This is what I like about these sort of announcements. You only need to include a small amount of information. But one thing I would have liked to see here is just how this compares to previous guidance, because I didn't really mention that. I could go back through previous announcements, which I might do now since I'm talking about it. And if you go to investor presentation materials, I'll have a look at that. Or maybe I'll have a look at financial results. I'm assuming they released some sort of update and expectations in these results. And I could be wrong. I could be wrong. Could be wrong. It doesn't look like they have got any guidance. Here we go, guidance. So they do have guidance here. So second half revenue is expected to be consistent with the first half. So we don't expect significant change. So revenue in the first half was 23.9 million. And now we can see how much that has been upgraded. Okay, so it's gone from 23.9 million. So they said similar to the first half. Now they're expecting between 28 and 30 million. So that's a pretty big increase. That's a pretty big increase in expectations. Okay, so that's a nice little upgrade from Cogstate. So these are sort of announcements I'm looking for all the time. And the last, so I'm looking for breakouts. I want the financial news, positive financial news. I'm looking for high volume, and I'm also looking at the share price at least the 3-month high. So do we have a breakout for Cogstate? And the answer to that is not quite, very close, but not quite. So the share price is in an uptrend. And at one point today, we did see the share price get to at least a 3-month high, but that was within the first, say, few minutes of trading. We did see a little bit of selling coming in, not a lot. It's not my favorite one-day candlestick. I do like the solid green candlesticks. Shows us that. So the solid green candlestick is share price opens at the low and closes at the high. That's my favorite type of candlestick. So this is not quite that, but this is sort of like a preemptive buy. So I'm just assuming the share price will go higher from here. I think it's a wise assumption. The other thing is the volume today was pretty good as well. So this is me just saying, hey, I think the chart will break out over the next few days. If it doesn't, I'll just sell. Okay, so that's Cogstate coming in at number 2. But the chart of the day, not the chart of the day, stock of the day by far has to be Collins Food. And how the market got this one wrong. Share price up 17.4% on results. And the market got this one wrong. We know the market got it wrong because the share price is up 17.4%. And actually, not only that, let's have a look at the chart first. Collins Food. So I was trading this. I know I am damning the market right now because I was trading this one because I did release something positive on the 7th of February. And the share price looked like it was moving into uptrend. They released something on the 15th of April, and the market didn't like it. And I thought it wasn't that bad. So the 15th of April, I forget what it was. I thought it was a no reaction from the market. A strategic review, that's right, strategic review and management changes. I thought it was a no reaction from the market, and I thought the market got it wrong, but the share price hadn't been moving down. I thought, look, I've got to follow my rules here. Got to sell out of this trade with Collins Food, and be damned if the market gets this completely wrong when they release results. And they did release results, share price, or the company's performance much better than expectations. That's why the share price is up. Now, because the share price had been falling and was in a downtrend, even though share price has rallied today, there is a bit of resistance. So there would be investors like me, well, maybe not like me, who bought on this potential breakout. Share price rallied. Then they saw the share price drop, and they went, "Oh, I've got to get out of this stock." They saw the share price rally today, and went, "Oh, now's my opportunity." That's why we have seen a bit of selling, and very close to a breakout, just like Cogstate. But I preferred Cogstate than Collins Food. But this is on the precipice of a breakout. And again, the one-day candlestick is not the best. In fact, the share price is almost closing near the low of the day, which is not good, which is also telling us that we have seen a little bit of selling coming in. Okay, so results were better than expected. Now, if you have a look at the numbers, you might go, it's not that good, but it doesn't matter what the numbers are. It's how the numbers compare to expectations. There's also a chance the company released some sort of positive outlook, and they did release an outlook here. So for instance, revenue only up 2.1%, underlying EBITDA was flat, underlying EBIT down 5.7%, and underlying net profit down 14.8%. So you might be saying, well, that sounds horrible, but it's better than expected. That's the most important thing. They also did release an outlook. I'm pretty sure they're getting out of Taco Bell, aren't they? Is that right? Did I forget? Am I making stuff up? Anyway, so outlook. And sometimes what drives the share price of a company higher is better than expected results and also positive outlook. So in their outlook section, they said or stated, while market conditions remain challenging, second half performance was markedly stronger than first half, with absolute revenue, EBITDA and EBIT all up on prior year. Pleasingly, sales growth in the first 8 weeks of financial year 26 improved again, with KFC sales up in Australia, Netherlands, and Germany. So it does look like things are moving in the right direction for Collins Food. So I can definitely see why the share price has opened up today. So this could be an opportunity, because I think a bit of selling has occurred because people have bought in higher share prices over the past few years, and they are selling out. And I'm hoping the share price can get above $8.80. Really, actually, we'll say $9. We'll put it at $9. There it is. That's a breakout level for Collins Food. Okay, so that's the stock of the day, Collins Food. Okay, on to chart of the day, which is Worker, WRK. This chart does look interesting. In fact, it's been looking interesting for a while. So started to look interesting back in the middle of 2023. I think I've mentioned this company at least once or twice. In fact, Ben Hutchinson did mention, what did he mention? Oh, Roger did mention he called Worker out earlier in the year as one to watch. Ben Hutchinson also mentioned promising pre-profitable software business, up 20% today on no announcement, just noise as Kneppy would put it, but that's still rather noisy noise for this stock. I took a small position last year and are watching progress. Okay, so the chart looks pretty good. Now, we have seen the share price go on bits of runs in the past. Back in September, October 2024, went on a really nice run from 3 cents to 7 cents. And then it went sideways for about a year, well, maybe not a year, from October to June. And now it's on a bit of a rise. Now, share price has gone on a 3-day rally. Let's have a look. We'll go have a look. Share price went on a 3-day rally up. We'll say 2-day rally, up 7.7% and 20%. Now, that 20% day was on low relative volume compared to the previous 2 days, but on pretty good volume compared to what we have seen over the past 8 or 9 months. But because the share price had been on a bit of a run, we have seen a little bit of selling coming in today. So this is to be expected. When the share price goes on an exponential run, you're always going to see a bit of profit taking eventually. That's just what happens. So I wouldn't see what happens here. So the share price went on a bit of a run for Worker back in September. Then the share price went sideways for about 7 or 8 days. That's exactly what you want to see. And then the share price can keep on going up. And then eventually the uptrend runs out of puff. In fact, the uptrend ran out of puff on the highest volume day. That can be a sign sometimes as well. Share price then went sideways and now on another run. So no idea which way the share price is going to go from here. This could be the start of another good uptrend in the share price before the next breather. And don't forget, the company will release their Appendix 4C in the next month. And let's go back to have a look at the last Appendix 4C I can't remember if this company was operating cash flow positive. They would have been very close, if not positive, because this company is definitely on my radar. Yeah, they were. So receipts 2.6 million and operating cash flow positive 564,000. Take away government grants and tax incentives, they were still operating cash flow positive by about $240,000. Okay, so the company is definitely moving in the right direction. So that is the chart of the day worker. Price has pulled back. Is this a buy the dip situation? Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, that's all I have. And if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. Did I already say that? No one's watching at this point. If you're still watching, what are you doing? Don't watch this. But maybe I could mention some, maybe not facts of life. The key to life is to have fun, enjoy yourself. That's the key to life. What's the point of having an unhappy life? You only have one life. Unless you believe in reincarnation, then we have many lives. But you don't remember those other lives. So the key to life is to enjoy it. Anyway, so that's all I have today. If you have a good day, and see you tomorrow.